All right, I wish I had an update on this trade tiff with China to give you, whether the Chinese are outlining their response to the president's promised tariffs on $200 billion worth of goods. Remember, the president said that if he sees them even attempting to match that, he'll throw another $200 billion on. All nasty stuff, but it's not come to pass yet. What has happened, though, Chinese markets are careening. Ours have been down 10 of the past 12 sessions. We're up about 19 points today. Let's get the read from our former ambassador to China under President Barack Obama, Gary Locke. Very good to have you, Ambassador. Thank you very much.
Good to be with you, Neil.
You obviously have a lot of contacts and know a lot of folks in China. Much is made of the fact, sir, that we haven't heard a response. We've heard that, you know, they're not just going to turn the other cheek, but they haven't responded with tariffs of their own to up the level to the president's. What do you make of that?
Well, they've already announced some tariffs aimed at, for instance, agricultural goods, yes, and some aircraft parts and things like that.
But not $200 billion. They're waiting worth, not $200 billion. You know?
No, not. Thank goodness, not $200 billion worth. And I think you will see the Chinese respond. There's a lot of national pride on their side as well. And just as President Trump is not going to back down, both sides are proceeding forward. And so we're just going to have to wait and see when the president announces his next round of tariffs, I think next week, what the Chinese response will be. But we need to try to figure out a way in which we can lower the temperature and get back to negotiations over some of the very legitimate economic issues that we have with China, especially over their forced transfer of American technology. Because oftentimes when American companies want to do business in China, they have to have a Chinese partner. They're not allowed, the American company isn't allowed to have more than a majority share.
Yeah, your approach and the President Obama's approach was to find a way, a low-volume way of dealing with this, but they were still sneaky, and they still would try to get around it, and they preferred that approach, I guess. Now, Donald Trump is saying, no, I'm not going to deal with that, but you argue that's actually more dangerous. Why?
Well, we're seeing the disastrous effects of all these tariffs and the retaliation, not just from China, but from all around the world, in which it's raising the cost of components that American companies use, which raises their price, reduces their profitability. And if they pass on those price increases to their customers, then they're losing against their competitors around the world. And oftentimes, if they then try to export these products around the world, they are facing tariffs as well. So it's a double whammy for some of these American manufacturers. And there have been many stories in all the different business journals and things like that about the day-to-day real effects of this tariff war, which is why we really need to have a concerted, unified front by not just the United States, but all of its allies against China. And that's why I'm saying that if China is, for instance, going to restrict the ability of American companies and foreign companies to do business in China, then all of the foreign countries should reciprocate and limit the ability of the Chinese companies to operate in outside of China.
Well, waiting for that would be like waiting for Godot. But let me get your sense, Ambassador, finally, about what impact you think this has. The president, of course, says that they need us, the Chinese specifically need us a lot more than we need them. And the proof is in their markets. They're now in a bear market, despite ours bouncing all over the place. We haven't been barely as affected. So that they'll come to the table because economically they have to. What do you make of that?
Well, actually, there's been trouble brewing in the Chinese economy for some time. You know, the worldwide demand for manufactured goods is softening because of the tough worldwide economy, and certainly these tariffs all around the world are dampening trade. But you know, they're having housing speculation, and that's it's been a bubble. The Chinese government is trying to tighten down the lending practices of the state-owned banks. And making sure that companies are not overly leveraged. So a lot of this was being set in motion ahead of time. But let me just say that obviously they want American goods, and so the Chinese economy will suffer, just as the U.S. economy will suffer if we suddenly impose tariffs on virtually all Chinese goods coming into the United States.
All right, I'm sorry to jump on you there. That break comes whether we're talking or not. But, Secretary, thank you, Ambassador.